Ladies and gentlemen, Cake here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down 1.2% there. On the S&P Nasdaq, down 2.3%. Semiconductor did get hit today, 4% negative. Looks like Dow held up better today. You can see pretty much flat there. Russell 2000 transport down up 1% or so. Banks green. Energy is up 4%. I mean, every single sectors and indices down today. You know, pretty heavily. But the energy is up 4%, continuing with this uptrend because energy had a great year last year. Biotech down, along with the healthcare, home builders, utilities, retail. These guys are all down. Retail, emerging market, held a little better. Bitcoin down about 2%. Gold, silver, miners holding up better in the last several days. Some greens there. Dollar flat, oil green, treasury bond down. VIX popped a little bit. Let's stick with S&P 500 ETF. Spider, 65-minute chart here. So this is where we close yesterday, and this is where we open. I mean, this price action, man, it's making me laugh just because, not because the price action itself, just because I can already picture how many people are just freaking out every single day, right? Just shenanigan after shenanigan. And like I said, you started trading in this market. You signed up for this. You must learn to manage your emotions, manage the shenanigans there. Anyway, that's the first hour gap down. And then look at that fluctuation, some crazy fluctuation. But it looks like, what happened was that on that first hour, it looks like that micro term support and the box is acting as support there, and buyers are actually doing a good job because just because we're in an overall downtrend in the short term, and so short to mid-term, and so I thought any kind of weakness we possibly could actually come back down to retest this here, but you see how this level held first hour, second hour, third, despite the fact that we did see that gap down. Pretty sizable gap down, I must say. And then what happened? Well, what happened was that fourth hour, fifth hour, right? Fourth hour and a fifth hour, after finding support on that micro term pivot there, we made a rally for 3 hours. And someone would say, well, but we closed the red for the day red, K, so yeah, it's nothing. Actually, buyers had a chance to utilize this gap down as another weapon. Do you guys remember when this gap was never filled? You guys remember this gap? Do you remember what I said? Is this gap doesn't get filled as quickly as possible, it will be miserable for the bulls. Well, it definitely got incredibly, incredible misery for those of you were suffering through that. Unless you're strong, right? You're strong, long-term investor. That means nothing to you. Then you're doing great. However, so you can see it's a pretty decent. It's a pretty similar size gap down right here. This one right here too. What bears could have done is that protected gap and use that. If this wasn't a breakaway gap, this could have been some kind of a continuation gap, because you know how there was that relief, oversold bounce. So bears kind of rest a little bit, gap it down one more time, continue with this trend if they can keep that gap, the down gap from this morning open. So you see, we know that when the gap gets filled, it's going to act as instant resistance. For those of you, my clients and my followers, know this. When the gap gets filled, it's going to act as resistance. That's why I often say best case scenario is that jumping over it, right? Turning into some kind of an island reversal gap instead of just feeling it. Because when you just feel it, this is what's going to happen. So despite the fact the market is down quite heavily so, I have to say, looking at the S&P 500 right here, this is a constructive move from the bull. If that gap remained open, for sure, we would have probably came down to retest a low today. We would have been down here talking about 420. So we're up here, fill the gap, and then and once the gap got filled, there's an instant resistance, right? So is that good for the bulls to make it up to the upside? Well, so it made a way. So it's so much better that that down gap from this morning was filled. Not only that, bulls worked really, really hard to fill this down gap and this down gap back to back. So bulls know that this is important level. They wanna settle here. Like they wanna stand their ground. They're trying really, really hard. But what we talked about yesterday, what was a key point that we talked about yesterday? A follow through, right? We need a follow through. One day does not make a move. So you can see yesterday is a 1 day move. We didn't see a follow through. We came right back. We got right back up and filled that gap. So we still don't have a follow through. So what we need to do, you know what I'm going to do? I'm going to move this right here because that's going to be that micro term swing high here. And that's the level. 439.44, 94, let's just go at 440. We can get above 440 and close above 440 tomorrow. There's a good chance bulls are going to go after 456, 457, even fill this gap at 463. But it has to happen like this week. Take too long. The reason is because momentum is everything, especially when we're dealing with short-term downtrend, short to mid-term, right? It's been like, I don't know, it's like 2 months, about a month. So let's call it a short to mid-term, right? We're dealing with the short to mid-term. But again, we're dealing with long-term uptrend, right? Watch my weekend video, then you understand. So we're dealing with the long-term uptrend while we're dealing with short to mid-term downtrend. So because of that, momentum is everything. Bulls are very adamant here. They want to utilize, and they worked really, really hard today, not letting the price get below the low or near the low, but bring it up, fill the gap. So we got some momentum going here. And I'm going to show you that Oscillator is telling us, Oscillator is actually agreeing with me that there's a momentum. We need to see a follow through. We need to see, if you're a buyer here, if you don't see higher prices, you want to see this thing closing above 440 for tomorrow and not this thing getting below 429, 426, right? And obviously, if you're a bear, 444 is a level to protect. Let's check out that oscillator and see if we can extract any more information. So oscillator is actually, it has actually healthy look. You can see that's what I call oscillator double bottom. And that's a breakout right here. And that's a neckline, right? So oscillator is actually telling us, you can see right there, similar thing happened right here, right? Oscillator is actually telling us, there's a momentum. Oscillator is telling us that as of close, oscillator is actually favoring the buyers. And obviously, man, this oscillator can curl right back down. But we got that initial higher high there. We got poking its head up, trying to break out. So all the buyers need at this level is to break above 440 and stay above it and keep attacking. And has to happen quickly because of we're in this short to mid-term downtrend. They need to make a quick follow through tomorrow and Thursday. If not, bears will utilize this overall downtrend that we're dealing with when this falling down. You ever watch tunas? They jump against the current.
There's only one way to get around them, and that is to go over them. It's a game of persistence and luck. Launching themselves above the sill requires formidable acceleration. Their muscles are adapted for short, sharp bursts of energy.
They lose that footing. They lose that momentum. They could die, right? So this is that scenario. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck training tomorrow.